Hi there, traders. Thank you so much for joining us here at Trade Delicious. We're super excited to get the ball rolling with a new guest you know and love very much so. He has been trading for the past few years now. He started off as an options trader, trading crazy products like oil in 2020 and less so crazy products like sugar. But he has incredible experience. He's run a collection of different trading rooms. He's the head of trading and risk management for both the Fivers Group and Trade the Pool. It is my honor to introduce to some and present to others the razor sharp Ruben Abitbol. Ruben, how you doing, my friend?
Thank you, Aaron. Thank you for inviting me. I'm happy to share, some experience I had, and again, I'm happy to discuss with you today.
Thank you, brother. So I wanted to start things off. I've looked at a lot of your different trade rooms, whether that be for the Fivers or for Trade the Pool, for us here at Trade Delicious. And I love the way that you talk through and about your strategies. But it's obvious that you have a lot of experience. So for those that are beginning out there, how did you start building your strategies? How did you start building the main strategy that you use?
Again, let's start. When I start trading, it was a way different way than maybe most of you guys will start. I start, like you say, trading options, which is a completely different way of trading. Generally, when you trade option strategies, you don't trade the direction of the price. We won't enter today into complexity of options strategy, which is most of the time focused on volatility and implied volatility. But I was not trading the direction of the price. I was trading the option pricing and use different strategies. And sometimes I was not exposed to the direction of the price. I was focused on something different. And this is where I take, let's say, all the tools and the strategy that I use today in directional trading, which can be forex, can be commodities, can be indices, and this is how I take all the tools that I use today. Um, so what to let's say, generally speaking, the tools I use today, I have actually two tools. One is a volatility indicator because I very used to trade the volatility when I was an option trader. So I'm all the time in touch with the volatility, which is a factor very important for me in my decision. The second type of indicators is a momentum. So I want to know if we are in a big or low momentum according to the volatility. This is the two factors that I use for trading. And if you want to dig a little bit deeper into which um, 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 tools I use is Bollinger Band, which is the volatility indicator, and the stochastics, which is the momentum indicator. When you combine the two things together and you have a little bit knowledge in analysis, the chart itself with supply, demand, and trend line, and support, resistance, Fibonacci, you can use a lot of different tools to apply to my execution. So this is what I use nowadays in trading.
That's fantastic, man. And I've used Bollinger Bands for years myself, so I definitely understand the value of that. That actually brings me right into my next question. So you talk a lot about volatility. You talk a lot about the VIX during your trading sessions. I do the exact same thing. Obviously, the VIX is at low lows at the moment. How do you change your strategy based on the level of volatility? Because right now, let's face it, we're in the middle of summer. There's not much in the way of liquidity or volatility. A lot of traders are on vacation and things are a little tougher right now.
Yeah, agree. The VIX is at one of the bottom level. I think today, especially today, the VIX is a bit going up.
Yeah.
Which makes sense generally when you see the VIX. Uh, it generally will go up very quickly and then slowly it will get down. So this is what we tend to see in options as well. When the volatility is is quickly going up in one side, slowly the volatility get back to the mean. And this is also one of the theory I use the mean theory, which is the reversion, which is something also very known. You can use it in medical, when you see the heart rate of a human being. Generally it tends to go back to the mean. And this is also my main theory when I trade. talking about the volatility recently, I think this give me a lot of opportunity, in the sense that if I see a strong movement in one side after a news, or even after we break a support, or after we break a big zone, and we have in a short amount of time a big movement in one side, I'm expecting at some point the market to go back to the mean. In opposite to when we have a very low range, okay, when the market is slowly going down, which means it takes a lot of time, I say, okay, I should be a little bit more cautious here because the mean is also going down along with the market. So this is how I identify the volatility at this day, and this is how I take opportunity most of the time.
I hear you, man. And when you're talking about the mean, what do you use for the mean? Are you looking like a 50-day EMA, a 200-day, or does it depend on the kind of trade you're trading?
I use the Bollinger Bands. I mean, when I see the
Right.
price going straight into the 20 standard deviation, or even close above, which is the higher band or the lowest band, I'm expecting at some point the market to converge to the mean of the Bollinger Bands. I believe that the mean of Bollinger
Gotcha.
Bands is the same moving average as 14 days, or it depends. Generally, it's 21 or 14 days, the default settings of Bollinger Bands.
I gotcha. I gotcha. So you just use the default in order to understand where the market is being pulled to. So in that case, are most of your trades shorter trades? Because I imagined that if you're just day trading and you're talking about mean reversion, that's something that can happen within a matter of minutes. So are you focused more so on day trading than swing trading?
Um, Actually, I don't have a lot of time to be focused on low time frame and trade daily. I'm responsible actually for the risk here at the Fibers and Trader Pool, and I don't have the time to be focused every single day to check what happens. However, you can also use a mean reversion looking at the daily or weekly charts. Okay, let's say in the euro dollar, for example, the last few weeks, the market went down, you know, at least with no retracement. Like it went down maybe 6 or 7% from 1.09 to 1.05, something like that. And then this was an opportunity because we were at the top of the Bollinger Bands. We crossed the average and we touched the bottom of the Bollinger Bands. So at some point, you expect the price again to converge to the mean. And of course, you can use the mean reversion in a swing trade, or either looking at the daily chart, which is correct.
I hear you. Okay. So I understand you don't have as much time. You're running a lot of things. You're running around like a chicken with your head cut off, I'm sure. So you don't get every day as an opportunity to trade these kinds of things. So in terms of your preference, now that you've traded so many different kinds of products, do you find that these types of strategies work on everything that you've traded, or do you have a favorite that you use these types of strategies for?
Very good question. Very good question, because this is something we need to be very careful. When you look at the stocks market, for example, a stocks can go up 200%, 300% with at least no retracement. Okay. And of course, when a company bankrupt and don't have money, the stock can actually go from $20 to zero. Okay. And you can buy as long as you can. You will never recover your losses. So this type of strategy, when you can expect a mean reversion, works generally in small time frame. It's working all the time, but if you look at a longer time frame, like on daily um, or weekly, you need to find a market that is a cycle. Generally, the Forex market is a cycle. Okay, we know that the euro dollar, when we touch the bottom below one, for example, we were at 0.95. The market cannot go like psychologically, euro dollar cannot be at 0.5. It should be balanced every single time. So you need to find a market that is balanced, that the market cannot go bankrupt at some point. For example, in crypto, it's quite the same. There are some coins that went up 1,000% and then went down 900, went down 90%. And here I can do nothing because the market will never go back to the mean. So you need to find a market that is cycle. The forex market is cycle, and I believe that the pairs that are more stable, like the euro, the dollar, the pound, the forex, the major pairs, are the one that let's say works a lot. looking at the weekly chart and the monthly chart, the yen. I don't know if you see the yen, the Japanese yen. What happens?
Yeah,
Recently, we went up at
yeah,
least with no retracement.
right.
At some point the market will move back to the mean. We don't know when. I'm not talking about risk management here, but at some point I believe that it will be a decade opportunity. You don't see the price moving up to the level of 2008 in a small amount of time with no retracement. So of course, like retail trader will say, yeah, it's an uptrend, so I will buy step by step. But at some point the big bank will come, and I heard also the Bank of Japan would actually stop to see they want to intervene in the market and say, yeah, we are not ready to see the Japanese yen decreasing in value like that. And at some point, the market will probably crash and go back to the mean. So that's why, again, I repeat, if you want to use this reversion to the mean, you need to find a market which is cycle in general.
Yeah, and I mean the Japanese yen. It's a unique situation, right?
Yeah,
We often talk about that in the trading room. The Japanese yen is they have their own problems at the Bank of Japan right now. So it's a very, very, very unique opportunity.
yeah.
So you talk about products that don't necessarily have a cyclical kind of environment to them. So you're telling me you're not an avid Bitcoin trader, is that right?
Bitcoin is the most stable crypto coin. So you know, this is a good question as well. But for
Uh,
example, Solana, which is also at the big market cap into the crypto, went down
right.
from 300 to 20. So Bitcoin also went down to 70,000 to around 18,000. So
That's right. Yeah.
crypto is a little bit more complex. We don't have a lot of data to the past to understand. If I will do something on crypto, because I'm also crypto enthusiast, I believe in crypto in the long term. I will not sell, let's say, actually selling the dollar yen or buying the dollar yen. I don't care because I'm not believing in the dollar much than the yen, for example. But in
Right.
cryptocurrency, it's like selling Apple when you believe in Apple. Of course, there will be some retracement. The market will go back to the mean, but I thought to myself, I will never sell any crypto, and of course the Bitcoin. But to summarize, I prefer actually to not touch the crypto things to use this type of strategy, which actually I cannot say this is a cycle. I don't know.
Agreed, and I think that's the best thing that we can say here. I'm right there with you. Mostly, I trade derivatives and equities. Whenever someone asks me about Bitcoin, I would love to give an opinion, but the reality is, I have no clue. I have no clue. I can
Yeah,
tell you support and resistance. It doesn't care. It doesn't care where what it does. So
yeah.
so talk to me a little bit about your perspective on some of your long term goals in terms of this strategy. How do you know when this strategy is working for you? Because a lot of people take these types of strategies and they might jump from this strategy with the Bollinger Bands to just using stochastics or using Heikiashi bars versus time bars. How did you know when you were trading the strategy that this strategy works for you?
Um, Again, a very good question, but generally it's a mindset when you need to be very calm and very let's say you need to believe in yourself when you do this strategy, because the market generally you will go against the market. Okay, you will see a big movement on the upside, and you will come and say, yeah, I believe this is the end of the movement, and I will start selling. Most of the other traders will continue to buy because it's an uptrend and it's something that continue. I'm doing the opposite. Sometimes I don't wait for any confirmation, which sometimes can be very risky. So I'm not inviting you to do the same. You need to practice first of all using this type of mindset. I don't like to say, yeah, use Bollinger Bands, use stochastics, use a specific demand in use specific zone in the market, and it will work. I believe that what will work is first of all the mindset that you're ready to take. Okay, the mindset is the reversion to the mean. You expect the market to all the time make some retracement. The market is a wave, and you want to take, let's say, the highest point in the wave or the lowest point, and then to expect the market to go back again to the mean. So no matter the tools that you're using, if you have the mindset, you can use any type of tool there are like hundreds or even thousands uh, indicators available. um, the mindset is the thing, the most important thing. When you believe that you don't need to buy when you're the last one, okay, because generally when the market goes up, goes up, goes up, and you want to enter at the last point, generally the market will make you sad, because the market will actually retrace when you enter, and the opposite side when it's going on the opposite. So first of all, understand the concept, understand the theory, and then try to apply using your own indicators, your own personality. I have a personality that I will never trade breakouts, and Jordan is the same. I think we had a lot of interesting
Yes.
trading room together, but he have the same mindset as me, and he's looking at different setups, but the mindset is the same. He don't expect that after 2%, 3% movement in a small amount of time, the market will continue to go up. And we explained the same thing on a different manner, which is very, very interesting. So this is what I can say about, or I can help people using this type of mindset.
Yeah, no, it's so helpful to just think positively and think through things when you're pressing buy or sell, in terms of, I am confident in this trade, I'm going to let this trade play out. That way I can see over time whether or not my strategy is successful. And you mentioned
Yeah.
something there that I really wanted to touch on from a risk management perspective. When you're in these trades, you're not just in a trade, you're managing this trade. So what do you do when, say, the trade's working out for you, you see an entry, you see some kind of trigger, and you enter, it's going in your direction? What's going through your head when you're trying to manage that trade from a risk perspective?
Okay. Um, First of all, my based on the theory, my target will be when we touch the mean. Okay, so basically,
Right.
when the market goes up and it goes up, goes up, goes up, the mean will also goes up with the price. When the price will revert and touch the mean, I will say I achieve my target. I can decide after if I believe the market can actually touch the lowest band of the Bollinger Band, which means we will break through the mean and go to the extreme zone on the downside. For example, if I'm selling, the first thing is the target I'm selling. I'm telling to myself, when the price goes back to the mean, I will be exiting I will do something. I will manage the position. I will probably exit 100%. I will exit 50% because I still believe the market can continue. So this is for exiting the market. Building the position using this type of mindset is much more difficult, because you never know when the market will retrace. So that's why you need to um, set up a space when you're ready to execute. Generally, it's very difficult to say, yeah, my entry will be here. I fully believe the market will retrace here. And then you go like the full margin from the beginning. You need to give some space for the market, because the market can continue against you few hours or even few days. And then the market will retrace. So you need to give you some space. Sometimes you need to have some partial entry, and you need to all the time calculate. And of course, you need to have your limit. Sometimes I'm wrong, meaning I'm selling the market and the market continue to go against me. So this is what I can say about the risk management on this type of mindset.
It's hard. It's not easy to do. And when you're in a position and it's going against you, to have that conviction to say, you know what, we're going to keep on track, we're going to keep on course, we're going to focus on this. It's a tough thing to do. And a lot of traders get very stressed and they panic and exit out of the trade. Is there anything that you do for yourself? You talk about the mindset. Is there anything that you do strategy wise with your mindset to make sure, even if this trade's going against you at 4 p.m. when you shut down the computers, how are you making sure you get to sleep at night and not stress too much over it? I feel like so many traders stress over that kind of thing.
Um, I think at the end, everyone is fed by psychology. Someone that is telling, yeah, I'm 100% stable. My psychology is fine. I don't rely on this guy. Um, but with few years and with some experience, you know how to handle yourself. Okay, I believe that generally when you start trading, you're not affected with psychology. I don't know if you already like feel it, but when I started trading options, I was not affected by anything. And then you understand, yeah, and you start asking in your mind, yeah, maybe the market can retrace here, and maybe I did wrong, maybe it was right, and then you start thinking and thinking and thinking. Um, and then sometimes you need to say, yeah, I need to be when I started, I mean, like clueless, and say, I believe in what I do. I'm clueless in what's happening in my mind because this is human being all the time thinking, and time after time and with experience you will let your mind sleeping at night when you are in a position at 4 p.m. This is what I think. But of course, if you have a big position, believe me, when I was trading option and we were like in a trading trading room with we were probably a dozen of traders, 12 or 13 if I remember. When the oil market moved a lot in 2020, no one was sleeping at night. So of course the risk management was different. But at 3 a.m. you wake up in the morning and you say, yeah, what's the price? Basically. So it depends
Wow.
what the volume of the position. Yeah.
Oh, of course. Bigger dollar signs means less sleep at the end of the day, and that's actually a great kind of segue there. You know, I trade oil from the derivatives market, and in 2020, it was crazy. Oil went negative for
Yeah.
futures traders, and I wasn't even in a trade. I could barely sleep that night. I had no idea. I had no idea it was possible for that kind of thing to even happen. So what do you do? That's a big opportunity for people to lose a lot of money. That's a big opportunity for people to make a lot of money. But everyone in their trading career has those kinds of moments where you get the really big winners and the really big losers. For your strategy, when you think something can really go, are you like, how do you decide those types of opportunities? This opportunity could be a really big opportunity that makes my month, or do you care about that? Are you just constantly trading the same way for each opportunity? Does that make sense?
Yeah, that makes sense.
Yeah.
I believe in consistency. I'm not believing in one large trade which you will be millionaire at the end, because if it happens, and to give you an example, at the favors, we are seeing every day these type of traders making 15, sometimes 20% per single day. Okay, per single day they are making 15-20% in a day. So of course they are risking a lot to reach that, but we can also expect that in the next few days they will also lose 10%. Okay, that's this is also something I typed in Twitter, which was interesting. I said I prefer to have a portfolio which make 5% return in a 1% volatility than someone making 20% in return, but 50% volatility in the portfolio. So I prefer to reduce the volatility in my portfolio, in my trades, and believe in consistency. Okay, so I prefer to have small trades that all the time bring me a certain amount of profit, instead of going big all the time and expecting a big volatility in my PNL. So this is what I think about that. Of course, sometimes you will have some unique opportunity when actually you can your type of risk that you will be able to take will be a little bit higher. For example, the Japanese yen, I believe there is a very good opportunity there for which
Yeah.
happen not a lot of time, um, and I will go with it, I think. But uh, yeah, this is basically what I think. Consistency is the key. I don't believe that you can like make all the time very big winnings, because at the end there are also big losing streak, and that affects psychology and hold the mindset that the trader can have.
100%. And I imagine those traders that are making 15-20% a day, I'm sure they're very excited to make that. I would be incredibly excited to make it, but it's so hard to make that a consistent thing. So
Sure.
for your strategy, do you think that, are you trying to get 1 or 2% of the account per day, or do you have that kind of goal daily? Is it a weekly goal?
Um, like you said, I'm not trading daily, but if I
Oh,
remember
right, right.
when I was trading options, which I think was a nice it was a nice experience. I had a daily loss set by the risk manager of the desk, which at the beginning was a certain amount. And time after time, when you get more experience, and then when you start to understand the patterns and how the market behave and the pricing, you increase the daily loss set per day. Okay, we did not have an automation. That means when the daily loss, you reach the daily loss in your equity, you need to close the position. It's not like the prop firm today that when you go to the daily loss, the account is closed automatically. So he was actually believing that you will close the position when you reach your daily loss, but we did not have any profit target. Okay, I mean, you could do like 10% a day if you want, but we know that if you have like 1% daily loss set, making 10% is quite winning, winning casino, winning lotto. So
Doing well,
um,
yeah.
of course, I said to myself every day that I was ready to close my session when I made around between two and three, um, at least that I won one time the daily loss that I had. It was between one and two. So let's say I could lose $500 per day. When I reach between 500 and $1,000 per day, sometimes higher, depends on the market moves, I would be closing my day basically.
Okay.
Okay, so it's
So your
that
goal
double of
was
the loss. Yeah.
right, right. So your goal was just to take this daily loss movement and use that as a measure to see whether or not you were successful for that day.
Yeah, yeah.
Okay.
Some people will say, "Yeah, this is my maximum daily loss," but most of the time I was reaching the daily loss that I had, which I I was believing in the manager there, and he said, "Yeah, try to play in the space that we give you. If you reach $500, which means you need to exit the market." And this is what we did every day. Of course, there are some days that the market did nothing, so I didn't touch anything. But when I was going to 500 PNL, 600, 800, I had nice position. I would close the day, and I could do it like in 2 hours, and then the rest of the day I'm just analyzing the market for the next day and so on.
I hear you. And so, as head of trading and risk management for the fibers and trade the pool, when you're building these types of strategies and you're helping traders to build that kind of strategy, is that what you suggest for most of your traders, or does it change for each individual person? How do you handle that?
Yeah, basically in the favors and trade pool there is an overall drawdown that you cannot reach into the account. There are also daily
Right.
loss or daily pause that we implement. Um, uh, Basically, we don't want a trader reaching in one position his daily loss or his daily pause. So you need all the time to give you few shots before you reach into this type of rules, daily loss, daily pause, whatever it is. Um, Generally you need to give, depend if you're it's of course depend if you're a day trader or a swing trader according to how much you can risk, but let's take an example as a day trader, which he cannot lose more than 5% per day. um, I told to the guy, you don't need to risk more than around 0.5%, between 0.3% and 0.5% of the overall account. Okay. Of course, in myself, when I was trading myself for a few times before I joined the Fivers, I was not risking more than 2% per trade of the overall capital I had, and 2% was the maximum, which means I had some trade which was 1%, 0.5%, but 2% is the maximum risk I was ready to take for one position. And one position means the overall position, the building position, because I don't have only one entry. I give me some space to enter the market. The overall exposure that I had in one position was maximum at 2% of the overall capital.
right? So keeping that conservative understanding of risk has really helped build a lot of successful traders. Now, Ruben, I know you don't have much time, my friend, so I have to ask, you've been so successful as a trader yourself and helping to build other traders from a strategy perspective or from a risk management perspective. What's the most important thing that we haven't talked about today?
I didn't think about this question. But let me think. We talk about consistency, which is very important. We talk
Yes.
about patience. So let me think about something we didn't talk actually. Um, maybe
If
we
you
talked
had to,
about everything. I don't know. Maybe you need to tell me.
if you
uh,
had to, if you're looking at some traders that are really, they're not performing well.
okay.
They might have the beginning of a good strategy. They might have a beginning of risk management. You got top three things that you want to tell them that
Yeah.
can really improve their trading, their strategy. One is that consistency. Another is the patience. What's the third?
Um, that they need to implement. Maybe they need to implement their own personalized strategy or mindset. Meaning, when I look at myself, I was all the time able to use the theory of mean reversion. Maybe someone else, according to his personality, will not like at all doing that, and it will be a failure, for example. So maybe looking at yourself, there are some traders that are more stressful than other. That doesn't mean that they will not be successful. And sometimes a specific strategy or a specific mindset is better for a specific trader. So of course, you will see a lot of different strategy in internet, in YouTube, ICT. There is a lot of things. I don't know what the name. S, SMC and stuff like that, which are fine, but I'm not finding myself into that. I'm finding myself into what I know that I'm good at what I do. So maybe believe in what you know, and what you can handle in the market. Don't do something that you don't know what to explain you. I will not be able to. If someone tell me, yeah, do my strategy, it will work. Maybe it's working for him. It will not work for me. Basically.
Thank you so much, Ruben. I think that's a beautiful place to end, brother. I know that you don't have much time, so I really appreciate you meeting with me here today. It has been such a pleasure. Guys, thank you so much for joining us here at Trade Delicious. If you like what you saw, if you like what you heard from Ruben, he does come on from time to time to talk to us through his trading room. It's always such a pleasure to have you guys here. As always, please trade well and trade delicious. We will see you guys on the other side. I'll see you. Thank you so much, Ruben.